Hello, folks. So you're once again welcome back to my channel. It's been a while that I posted. It's been quite like 10 days now that I gave you an update. So today I had a little bit challenge and I'm coming back to your screens to give you a quick update on what's happening on volatility 75 and also adding on to what I'm going to give you today is I'm going to show you how you are going to execute trades on lower time frames that will help you minimize your losses. That will also help you have smaller stop losses and then execute trades that in a way will just minimize your stop losses. But before then, let's look at our updates on volatility 75, what has been transpiring so far. So on the weekly time frame, this is what happened within the whole of this week. Price actually moved all the way into the mean threshold of this bullish candle here, and then it closed very close tight in here, and then we have opened for another week, which the market opened on Sunday. All right, now let's look at what um, is happening on the daily time frame. So on the daily time frame, people have been asking, so were you expecting all this bullish movement up? So 2 weeks ago, if you watch my video, I posted that should price was around this area, and I told you that should price come down and sweep this low, we are expected to go down for a drive to sweep this fair value gap resting in here. This fair value gap resting in here. In so much as price didn't do that, we were in for this ride up to close in on this fair value gap resting in here, and ultimately price trading into this other block resting in here. Exactly. Now let's break it down further and look at interim, what price did within these areas. Okay, let's break it down and let's see what happened when price got into these areas. So we're on the daily time frame. Let's look at the 4-hour time frame. Sorry, I'm trying to I've connected my video, but the lighting system in here is not really helpful. But let's just manage. We are here for the lessons actually. All right. So on a daily time frame, let me draw my line to show you where we want to look at price all the way from this point coming. So now let's look at it let's go to the 8-hour time frame rather. So I was looking at price sweeping this low in as much as price couldn't do that. So price actually we were around this place. My last video that I updated were around this place. So price had traded closed in on this rally, this fair value gap. Price couldn't close below this low that was formed here, and then what it did was that it rallied back up, closed in on the sorry, price rallied down into this other block, rallied back up to close in on this fair value gap resting in here to sweep all this liquidity resting in here. And then what it did again was that it had to trade down. This area was regarded as a short-term low. Why? When price traded into from all this high, this point, this high, and then it took down this low and then rallied back down. This is what we call in ICT we call mitigation block. Okay, so this is how mitigation blocks are usually formed. Okay, let me use my tool. This is how mitigation blocks are usually formed. So we have a price action that price moves this way, comes down to a certain low, okay, and then rallies back up, let's say form another high, and then instead of price coming to break this low, it is unable to break this low. It is rejected by either an order block resting in here, so price is rejected to the upside. Okay, and in as much as it takes down this high here, so for instance, if price is coming from a certain, let me not add that, so if price was actually trading from a certain high, comes this way, so normally on the normal, let me wipe the whole thing and can show you a clearer picture from this chart. So for instance, we have price rallying from this high to this point. Price rally this way, and then on the normal, we're expecting price to continue downwards and break the low because we are in a downwards trend, all right? But it doesn't continue, it's rejected by the other block resting in here, and then it continue to rally up. In so much as this high here has been broken, we regard this particular setup as a mitigation block. Okay, so the market must actually trade back into this area and mitigate all the losses because it was expected to trade back in here. So and it puts its stop loss on this high, so it has to come back and mitigate all the losses that they made in here. So they trade back and then they mitigate all their losses before price will continue in the direction of trade. All right, so beautifully on the 8 hour, this was what happened. Let me clear everything on the chart. um, all right, so beautifully on the 8 hour time frame, this was what happened on the chart on the 8 hour time frame. So we saw that price rallied up here and then it couldn't break. But funny enough, why I considered this as a short-term low, let me quickly put my, why did I consider this area as a short-term low? That price had to come and sweep. I would have regarded it as a long-term low if it was able to go and sweep just the immediate high. It couldn't go and sweep the immediate high, so I regarded it as a short-term low. Take some of the things I say. This is a low that wasn't able to go and breach an immediate high. Okay, it was not able to go in and breach the immediate high, but then it rather traded into this and considered this as another block, and then it reversed and then took down. So price actually swept the low here because this is a short-term low, and then before price rallied up and then came down all the way, took down the high in here on the short-term low. So liquidity has been swept both from the lower side and then the upper side. Okay, so watch this. You could see that liquidity has been swept on both angles. So in as much as anytime you have a short-term low and price sweeps either the low or the high, we should know that it's obvious it's going to sweep the other end as well. So watch that. It swept the high, it swept the low. First of all, it came to sweep the low and then it went to sweep the high. And then price had to trade back into this area before it continued to rally up. So on this account, we have something of this sort in here. Okay, we have so we have price either rallying from a certain high all the way this, and then to this point. Let me use something simple that will make your chart more clean. Okay, uh, now I'm trying to use this. So oh why is my, no. All right, let me use my simple tools that would make easy understanding. Okay, so we have price rallying all the way in here. Pardon me, let me quickly change this to so that it makes the charts more visible. All right, so price rallied all the way down in here. So what it means is that price came to form this short term, and then our mitigation setup was duly formed in here. Okay, so we had a high here, and then obviously this high is not considered and this low is also not considered, so we have another low in here which is not lower than this, and then we have price rallying back all the way. Look at this is regarded as a high. Okay, why is this so? It is regarded as a high because we have, when we have a swing high are formed when we have candle to the left lower than the candle in the middle, and candle to the right also has a higher that is lower than that of, so this is regarded as a high, and then we have a low coming in here. As easy as that. Sometimes the highs and the lows are not so much obvious and so much clear. All right, so you could see that we are still rallying up beautifully. So price, someone may ask, so am I sure we are in a rally up? Yes. Why? Because let me quickly point the lows and the highs. So we have this low one, we have this second one resting in here. Sorry, we have the second one resting in here. We have the third one resting in here. We have the fourth one resting in here, and then it goes on and on. So look at the lows. All the lows that are formed are higher than the current lows that are formed are higher than the previous lows. So this is higher than this. This is also higher than this. So this is higher than this. This is higher than this. This is also higher than this. So it shows that we are clearly in an uptrend. All right. Sometimes the highs and the lows are not so much clear and not so much obvious, but that is what the market is doing beautifully on the 8-hour time frame. So for instance, if we say this is a high and this is a low, where necessarily do we think that price can reverse? Anywhere along this line, price can really reverse. So let's say if you want to set a trade, you can wait in any price level within this place. You put your stop on this below this low here, and then you're good to go. Price can break this low and consider this as the immediate high, which is highly possible because price considered the previous high here and then it rallied all the way up in here to close in. If price breaks this low, then we are considering the high to be this, or we are considering the low not to be this but to rather be this. So this then becomes a short-term low, meaning price has to break below this. Then our trades are set around this area beautifully, some fair value gap resting before this bullish order block here. Your trade is set around this area, your stop is below this, then we are expecting for a rally up. Always have in mind that there are two sides to the market. The market can go the way you want it, or the market can go the opposite. All right, so here I am expecting that around this area we would have some beautiful setup here to give us the room to say that this is a low, so we can rally and run up. Now let's look at this same chart. I'm not cleaning anything, I'm not erasing any of the lines. Let's go down to our 4-hour time frame and look at what we are talking about. So on the 4-hour time frame, this is what we have here. You could see that price is somewhere around this area. You could see that when price rallied up it traded back into this and considered as an order block and used the price to rally or run up to this level. So if we consider this as an order block on the 4-hour time frame, whatever price will do when price gets to this level, we either buy, expect it to either come into the mean threshold of it, buy, and then hold on. Now let's look at price on the 1-hour time frame. Now let's look at price on the 1-hour time frame. So the 1-hour time frame is even giving us more room to see that, okay, beautifully, there's a fair value gap resting in here just before this bullish order block here. All right, but also we can see a fair value gap resting below this, which now defies however, you can still place your trade in here, put your stop, your small stop. The market is not an always win game. All right, it is not an everyday winning game. So beautifully, you can put your trades in here with a small stop in here. Expect to catch any of the highs, any of the short-term highs that will be formed before the rally into this. So should price not form any short-term high here and rallies down straight into this order block, as you are buying, your next achievable high is these two equal highs resting in here. Or you can even take your trade, you can take profit off inside this area. As beautiful as that. All right, so this is the little update I have for you on volatility 75. Let's look at it on the 30 minutes time frame, as well. So you can see clearly that on that 1 hour there was an order block, and on the 30 minutes we are seeing another order block resting in here with this fair value gap before it, which is a possible rally or possible reversal when price trades into this area. All right, so beautifully, this is the quick update on volatility 75. But overall, what we are expecting is let me wipe my chart. But overall, what we are expecting is, I mean, look at this. When you consider this area where price does all this, has taken the low here, and you could see that it's still rallying up. The possibility for price to do what it wants to do on the upside it's obvious. All right, it's very obvious. Okay, so let's see how it plays and what the market presents to us. So if you are new to this channel, I encourage that you subscribe, you give me a thumbs up, like the video to encourage me to record more videos. All right, so another update that I have for you is that I have videos coming for volatility 100 and step index as well. And those interested in trading boom and crash, I have updates for you as well. I'm bringing in some more updates on how you're going to trade boom and crash and be on the winning side. So until I see you in the next video, if you are new to the channel, subscribe. Enjoy the rest of your evening. See you.